What if you could spot one of the market's most explosive trades right before it happens? I'm talking about the parabolic breakdown. In this video, senior trader Garrick Drynan will reveal the exact variables that combine to produce a hidden signal that most traders completely miss. I'm Mike Bellafiore, co-founder of SMB Capital, a top proprietary trading firm with offices in New York City and Miami. We've built numerous 7- and 8-figure-a-year traders, and we teach what actually works. If you're serious about trading, you've found the right place to learn how to grow your trading account. Let's get started.
All right, the parabolic short, one of the most explosive intraday setups known to all of mankind. This is one of my favorite setups, especially when all the variables line up. So today I will outline these variables for you and review how I like to trade this setup. What we do again and again on this channel and as traders is nail down the variables that make our setups fly. We put in the work, and that's what we do here. So we want to review this stuff so that we know what to look for, right? Historical examples, historical data, our own trades. And luckily, I've done all these things because that's pretty much all I do other than run a few miles here and there and spend time with my wife. So this is for the trader who is interested in trading parabolic shorts but doesn't know where to start, or likes trading parabolic shorts but wants to be more selective and only trade the best ones, right? Or likes trading parabolic shorts but has trouble timing them well, because timing is everything on these trades. Trust me, I've lost plenty of money on the front side of these trades. It's a common trap. So we'll get into how we will want to navigate that. So what is a parabolic short? This play is a short trade taken on a stock that has blown out to the upside. So we wait for a stock or any trading instrument, right? Could be a commodity or something like that. We wait for a stock to not only overshoot to the upside on the daily chart, but also to get parabolic and blow off. Our trade is to capture the unwind after the blow off. And this is a tremendously powerful trade. How do we set this up? So what's the context? And this is really key to this trade. Without this step, nothing else really matters. So if we can't grade the context of this setup and determine how to get the timing right, our execution won't matter, right? We'll just get chopped up on the front side of the move. So what are the variables that matter here? There are 3 of them. I'll break it down. The first variable is ATR. We have to know what ATR is and how to use it. ATR stands for average true range. It measures the average range of the candles, including any gap. And we use this on the daily chart. We can access this indicator on any platform. The reason we care about ATR is that ATR measures volatility. And here's the key. If you only take away one thing from this video, this should be it. We want the rate of ascent of the uptrend to accelerate. We don't want it to grind higher in a linear way. Right? So if it's grinding higher in a linear way, I do not want to get in front of that. When it's grinding higher, it's price accepting at each new level, consolidating, pushing higher, resetting, consolidating, and pushing higher. We want the stock to ramp without price acceptance. At some point, we want it to go parabolic. And so we look for it to accelerate. These will usually accelerate for about 3 days, and they will often have 2 to 3 consecutive gap ups into the blow off. This dynamic helps make the setup A+, and it helps us time the trade well. So as the stock moves higher on the daily chart, we want to see the ATR increase. This tells us that the ranges are increasing. This tells us that the volatility is rising. And this is what happens when a stock starts to accelerate and get parabolic. Also, the number of ATRs the stock is trading above the 50-day moving average will increase. Usually, these will get somewhere between 7 to 10 ATRs above the 50-day before blowing off on the best ones, right? And we can measure this using a Keltner channel. So a Keltner channel sets a band at a predefined number of ATRs above and below a moving average. So I like to set a Keltner channel to a 50-period moving average with a 10 ATR factor. And this will give us an area where these are likely getting very close to topping out. What's our second variable? Second variable is volume. So we want to see volume accelerate into the blow-off. As the stock begins the parabolic phase, the volume of each daily candle should increase. And the blow-off day, the day of the trade, right, as we call the backside day one, should have the most volume of the entire move. So we're going to see big R-vol on that morning and on the day of the trade. This tells us that shorts are getting blown out and long participants are getting more and more euphoric, buying higher, right? The increased interest in the stock during the parabolic phase helps make this trade A+ and helps us time it well. Okay, so the third variable, implied volatility. This one is my favorite because it's something a lot of people are not looking for, but it's this dynamic that often creates these moves and creates the unwind. So we want to pay attention. The acceleration phase of this trade is often driven by options. You've probably heard of the notorious gamma squeeze, right? Market participants buy more and more out of the money calls, causing dealers who sold those calls to buy the stock to hedge their position. And as the stock rises faster than volatility is priced in, they have to buy more and more stock to hedge their position. And this causes a feedback loop where the stock starts to rise faster and faster. And this dynamic will have to come to an end at some point. And when it does, it usually ends with a bang. So the implied volatility of these options usually gets blown out during this phase. And the unwind usually occurs towards the end of the week on a Thursday or Friday as these options get closer to expiration. All right, as the out of the money options start to come off the book, the dealers can unwind their hedges. The feedback loop reverses and the snapback can be violent, which is when we come in and short the stock. So the best way to track implied volatility is by watching the options chain, all right? Paying attention to the IV of the weekly out of the money calls, paying attention to premium of these calls, and paying attention to how far out of the money the 20 delta calls are at each stage of the move. But for those traders who don't want to watch the options chain like some kind of archaeologist, there's a simple indicator for this on most platforms. So on Thinkorswim, it's called IMP volatility. It plots the 30-day expiration of various strikes, similar to how the VIX is calculated, right? So this is going to plot the IV of a broad range of strikes, and this broad impression of implied volatility will correlate well enough with the IV that we care about on our weekly options and give us a good idea of when IV starts to accelerate and blow out. The acceleration of implied volatility, along with the acceleration of price and volume, help make this setup A+ and help us time the trade well. How do we execute this? Right? What's the trade? So we've got our A+ parabolic short setup. The context is great. Now what do we do? How do we execute this? So the best iteration of this trade is when we get a final gap up out of the acceleration phase, and this sets up a trade off the open. So there are three main ways this can play out, and then some continuation patterns that are covered. So number one, the opening range break pattern. This setup often appears on the days leading up to the final day. So the context that we covered earlier really has to be aligned here, right? It's okay to take some stabs on the front side, right? But we want to be cautious because there can be fake outs here, right? But it often plays out when it does crack this way. Sometimes that's what it takes, right? We have to allocate our risk according to the grade of the setup. And as the grade of the setup increases, we can risk more. So there might be one more day of this move before it tops out. But the key is to allocate the risk appropriately, right? Read the tape to identify those modes where they are just sticking the bid after flushes and put on the full risk when everything aligns. The stock will develop an opening range and often failing to take out the pre-market high, and the entry trigger is on the break of the range low. All right, so number two, the down through open pattern, right? We'll see a rally off the open. We'll see a quick turn as it trades back down through the opening print. The entry trigger is either on the break of the open or on a hold back below VWAP. All right, so number 3, the long consolidation rollover pattern. And this setup occurs more often when the final day does not come from a gap up. With this pattern, the final day sometimes comes from a gap down, and it's a great way to capture those setups that don't materialize in this A-plus contextual way that we've been discussing, right? The high is usually put in near the open, right? There's no need to catch the high here. The entry trigger comes when it tightens up below VWAP after enough sideways action to frustrate both shorts and longs, right? And so for all of these setups, you can set your stop at the high of day or the top of the consolidation, or if volume comes in and you think it's game on, right, for momentum, you can use the prior 5-minute bar high. All right, so number 4, and this is a bonus, I call it the backside second leg. So when this gap up failure occurs with a bang, there's usually a second leg, and this can be a much easier trade. We usually either get a VWAP retest rollover pattern or a sideways consolidation bouncy ball setup, right? So Lance coined the term bouncy ball, and he has a number of great videos on this setup. So I love attacking these trades because at this point in the cycle, the backside is confirmed, right? We've seen that first leg, we've seen a bouncer consolidation, and now we can play for the continuation, right? We have the wind at our back, and though the second leg may not be as explosive as the first, catching it can be much easier. So finally, let's talk some targets for the trade. Most of the time, these will take out and close below the previous day's low. So if the trade has triggered and it's still inside yesterday's range, then it likely has more meat on the bone, depending on how far it gapped up, right? So most of the time, these will also pull back to the 5-day moving average, right? Most of the time, these will close at the lows. And this is why I love these trades. When they unwind quickly and ferociously. The reward is substantial. So if anyone trades these and has additional thoughts, please let us know in the comments. And as always, if you have any questions, hit me with them and I'll be happy to elaborate.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of the laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.